Welcome to the bullpen. My name is Nick. Let's get started for the day as we watch the SPY kind of dance around during pre-market. Here we go right here. As you see, yesterday we couldn't get over this line right here, this trend line that we're seeing right here, right? So it gets to, let's get a better look at this. It gets to 399, 399.10. And with 399.10, let's get over here real quick. So yeah, it kind of stays right here at this level. Now, if you notice during post market, right, it drops down under this trend line and gets back. Now it's retesting it. It can't stay over. It's retesting it at this moment. So for me, that's an indication that we might be bearish today. However, if she can get over this level, we may actually see what we're looking for. And I tell you, let's go ahead and jump over here real quick for what we kind of feel like is going on today, the forecast, if you will. Okay, the forecast states that if we stay under 397.82, we're going to come back to 395.98. Now, this ain't a bad thing necessarily. All this means is that if it stays right here and we open, we're going to dip down, slap on 395.98, which is this little, what is this, several day ascending line of support that we've kind of accumulated for the time being, right? And that gives us strength in this trend to come all the way back up, which at the top of this channel that we kind of be sitting in right now is at 403.19. So if you're wanting to take position for the buy side, you're going to want to have it at 397.82, ride it up, make sure it breaks above this level here, right? Okay, if you don't, you might get what they say bull trapped. Okay, so kind of be careful right there. But of course, let it keep moving upward, and you'll be all right. You'll be doing just fine. Now, as you see here yesterday, I even said it before because we're sitting at this line here. All right. Because we're sitting at this line here and right here, I felt like we were pretty much near the top of the trend. And it kind of was. Okay. Because we did come down, hit this channel again, and then we came all the way back up on open market, giving us a nice big green candle for the day. But as awesome as that may seem, the problem is that we cannot stay above 397.82. This is a significant level for me that makes me think that we may not be going up any further at this point. But you never know until it actually does its job. So let's move back over to here. And as we're currently seeing right now, that the SPY is still kind of hesitating. But I'll tell you what, let's also do something else for ourselves. Let's go ahead and jump over here to the several different charts, right? We got 6 different charts of 6 different time frames on the same thing. So we're kind of paying attention here, and we got a few things going on right in this area. So here's a line. This little line right here dates all the way back to, I believe it was 2008. This trend line back dates to. So nope, never mind. This one is the wrong one. That's the wrong one. This one's January 4th of 2022, and I'm waiting to see if we're going to get to here before we drop. All right, that's what I'm kind of looking to see. However, based on the way the trend is going, look at this 5-minute chart. I don't see us going up any further, right? Because the fact she can't stay over above this trend line, which is the line that we were talking about before, around 397 or so. Let's go ahead and take a look at that one more time. Yeah, 390. What was that? Close about 398, 398, 398.5. So yeah. All right. Let's see. Let's go to the slides. See if we can't get a better view. Yeah, 397. 397.82. So right now we're slightly above that. We're above that right now. 398.02 right at this moment at this trend line. So my thesis is very simple. If we can get over this trend line and stay above 392.82, then we can 397.82. Then we can get the push up, upward, getting us up to this area over here, 403, maybe 404. I'm sorry, 400 to 403. That's kind of what we're looking for right now. And the thing is that I believe that we're not really too much further in a bull trend. I believe that we're going to be going down here shortly, and the only reason I believe that, right, is because of the fact that we're going to be moving lower. I tell you, let's take a look. Let's go back over here real quick, and let's do this. We got a little time. All right. Now, I know this seems like a lot, right? Because when you zoom out, all these price levels, it seems like it's all jumbled, right? So we're just going to, doop, we're going to get rid of all that. So there we go. Right here is the Fibonacci retracement, is what you're seeing up here. Okay, we're dancing around these levels. This level goes all the way back. Let me see, back out. If it back out of this, I have to really back out of this, huh? I'm gonna show y'all where this thing starts and ends, right? Because don't they get annoying? People try to show you something. It's like, Where's it start at? How do you figure these levels out? There we go. This level's down all the way down here, 218.26. Like I said, at 219.25. No rhyme or reason. Just that's where I just had it. But you see right here, 50% retracement. It hits there, bam. You got your bottom of this retracement. Remember, people kept saying that we're in a bear market, right? I've been saying this in several videos so far, hopefully to get it through people's heads that we're not in a bear market. We are in a 50% retracement. This is a healthy retracement, okay? Very healthy at that. This is more like a crash, okay? This is more like a crash. Nice recovery, but this is more of what a crash would look like, okay? This is not a crash. You have healthy pullbacks, okay? Comes down, bounces around. Healthy pullback, comes back, bounces around. And another healthy pullback. So when do we fall into a bear market? Well, the good question is if you, we'll draw a temporary line real quick. From down here to this line right here, right? All the way down, because this is the beginning of our bull, or extenuation of our bull. Anyway, so let's bring this down about right, and make sure they touch. Touch. There we go. So around here, 369.20. Anywhere around 369.20. So based on how many days this thing takes to make these falling peaks, right? Then, of course, how long it takes for these falling peaks to go from side to side, okay, gives us an indication of where we're going next, right? Or where we could be bouncing to. If we can get over this descending line of resistance, if we can get over that, okay, we can get to 418.16. Now, if we get over 418.16, we've broken this descending line of resistance. That means we are in a potential, not actual, potential bull trend. Okay. Um, we got to get to 418.16, and we also need to break above 418.16 to continue on so that we can get the retest at 497.61. Now, this isn't going to happen anytime in this first quarter, maybe not even the second quarter. I'm going to tell you this now. I believe that we're not going to hit till the third quarter, getting past 418.16, if in fact we can break this descending line of resistance. Now, yeah, 450, anything above 418 is going to be third quarter. We can get to 418 around this first quarter. Okay, that I can say because we're already at 398. We got to 398.50 at the end of day Friday. We're dancing around 397.75. See, it's right up here. Okay, so the thing is that we are looking for it to get to a particular place. In order to do that, we have to follow price action and, of course, trends and whatnot. So what makes me believe that we can make it a 418.16? Well, first we talk about the average price per day of the SPY. Okay, And not from here to here, because that was not going to give us an average price of the SPY, because this is a good full downtrend. The average price of the SPY was this year ago. Now we're in this now this year is the downtrend, so this is going to be more of the average price of the SPY. The average price of the SPY is dancing around between $4 to $6, about average. So that being said, and I think it's actually getting a little higher, to be honest. 'Cause I've been seeing it reach around between $5, $6, and $7 per day. That being said, let's get zoom in here. What I'm looking for is if this can continue, right, $6 or $7 at a time. That means, pending a few downtrends here and there, I believe we can reach 418 roughly around either the end of February, or maybe even into March. All right, that's when I think we're going to reach 418 if it can break above this line of resistance that we're currently sitting at right now. All right, so we got to break above this. So the fact that we're sitting at it at this moment, and let me show you. Let me move over to my macros real quick. All right, so we're right about on it. We about right here is where we're going to land, which I believe is like 403, 401. Yeah. So if we can get above 397 and 397.82, then 403 is definitely in the books. But if we do not get above 403, then we will not get to 418. Okay. So as you see, I have different levels for different things and so that way I can pay attention to different areas to give me a more accurate number of what I'm looking at and how far it can go. And right now, until we get over 403, that's the target. We are not getting to 418 like we would like. 418 is about roughly right there. Not right there. That's 415. 418. There you go. Close enough. 418. So we want to get about right there. Okay, 418 would be nice. Now, if a catalyst comes in, and we've seen SPY do it. Here's one over here. We have one right here where the SPY will jump 11, 10, even $20 on catalysts, right? So that being said, if the catalyst comes in, like maybe a good CPI, maybe a good whatever the catalyst may be, it can actually get us up to 418 very quickly. But do not expect us to break over 418. That's what I'm saying. Okay. If we rally up to 418 in one day, do not expect us to break it. Make sure you are in the trade. Take profits on the way up as she's trending upward, and make sure you sell at 418 when she gets there, because I'm willing to bet dollars to donuts she's going to pretty much stutter and stammer right there, and she won't go any further. Okay, or worse, she'll drop like. Let me back up real quick. She'll drop like CPI did here, where this whole thing, this whole gap right here, this is CPI day right here. She gapped all the way up, got to 414, okay, got to 414, came back during pre-market, opened up at 410, came down, backed up, slammed right back at 410, and dropped. And then she dropped hard. So if we had that same kind of reaction, whether it be pre-market or in the market, it runs a $20 run, okay, expect a big pullback off of 418, even back here when we got to our lowest point at 350, actually 348.11. This big rally here, once it got it to where it wanted to go, guess what? She had to pull back, okay? This is a healthy pullback for a continuational uptrend that got us to 400, all right, or even 410, 414. Now, I actually have a thesis in here somewhere that states, let me see if I can find it real quick. I'm going to have to really pull back, because I did this before, right, before we got to it. Let's see. Give me a second, I'm pulling it up. So I can watch the spot. There it is. There we go. So before we even got there, before we even got to around 400, let me put it right here. Over to slots. There we go. This is the thesis I had before. Once we clear the breakout of over 398.19, we can see a rally to 408.72. See, look at the timestamp I have on this, right? Check out the timestamp I have on this. All right. This is what I love about proof. I love it when people say, "Oh, I called this." Show me some proof. Show me that you got a timestamp. This is a six-part thesis. See that right there? Six. This is a six-part thesis. Okay. So this, in order to get all this out, this thing took six different screenshots plus, as you see the writing involved, just to get this thesis down the way as accurate as I could. And of course, we got to 408.72, right on the nose. On one, if you look at the chart, let's see, back it about right here. Let's see. There we go. So back at 11, let's go back over here. Oh, whoops. I guess that didn't work, did it? If it helped if I did this, no, wouldn't it? Let's see. Sorry about that. Give me one quick second. Gotta love how this thing gets wonky, right? All right. 407.68 right there. And look where she did. I said before, once she breaks over, right? Once she breaks over 398.19, okay, she'll get the rally. Bam, breaks over 398.18, got all the way up here to 407.68. I said 408.6. I said 408.72, but check this out. The gap up opens at 407. I'm sorry, 408.77 on the open. Check that out on the open. So there you go. She made it all the way up. And what my thesis was, thesis stated, right, back then ago when I wrote her down, how far she was going. And I wrote this today. I believe I wrote this the day. I believe I wrote this the day of. Okay. Let's see. Was this 11/11? Right. Let's go back to the order form. When did this finally hit? Let's actually take a peek and see what day it hit. Day it hit. Oh, never mind. It wasn't the day of. I had this set up. Sorry. I mean, I'm surprised myself. This actually hit November 30th, 15 days ahead. So I had this 15 days ahead of schedule saying that once we break above that level, we can get to 408.72. And what you do, got exactly there. About 5 cents higher than I initially anticipated. Actually, it opened 5 cents higher. It got to 410. Okay. As far as the high of this candle is around 410. Opens at 408.72. And then she starts moving downward. So I called this out like 15 days before the actual pop. Now that's got to be amazing, right? And that's what I try to do here is I try to make sure that we get accurate numbers so we can take profits and ensure that we make money. Because unfortunately, a lot of people will continue to tell you that you can't figure out where the top's going to be. There's no way to figure it out. Anybody who tells you they can, they're lying. Well, there's your proof right there. I got to the top, not the tippy top, right? You don't want to try to go for the tippy top anyway, and here's why. Can you find the tippy top? Yes, I can find it enough times. I won't say more times than not, but I find it enough times. But it doesn't mean I get in at the tippy top. What it means is when I see it get to tip top, I am now looking for a buy setup, right? And when you finally get into a buy setup, you can actually start rolling down. Like for instance, we're in pre-market right now, so just hypothesizing. Let's say this is the tippy top right here, right? Actually, this would be the tippy top, but I see this is the tippy top, so I'm looking for a buy setup. My buy setup would be this right here, right? These two. My buy setup would have been in here. I would have took it, and I'd be my target. It would be around about like right here, around 397. Let's say 397.10, right? You want some meat on that bone to make sure you actually get to target. So don't go when you're trying to figure out if you're, try to find the very bottom, try to get to the very bottom. Okay, even most skilled can't catch the very bottom all the time. So if you want to make a better play all the time, get the meat of the move, right? Put your target where the price is mostly hitting, right? Now where it's barely hitting, mostly hitting, and you're more likely to get out and you're able to lock in profits better. All right, so if I got in up here at roughly around 397.90, my target will be right here, 397.20. Okay, that's a 70-cent range. Now, if you have $100, if you have 100 shares in this, that's $70. All right. So yeah, if you have 100 shares in this, that's $70. Now, if you had 1,000 shares in this, that's $700. Not a bad move, catching the meat of the bone. Okay, and as she moves down, you want to, of course, if your entry is here, your stop loss will be here, right? There you go, right here. And then, of course, you let her play out. Once she gets under the 200 SMA, you want it to get here to 397.20. Okay, so as we're going to watch this and see how it's playing out to kind of get an idea. Now you notice, right, there is no volume here. There's really not much volume. Let's see if we can't get volume if we cut out all that big mess behind it. See if we can get a little bit more volume if we cut that big stuff out. Oh, there we are. See? That's how you get volume. So let's see if we get down to target 397.20. And again, this is just pre-market play, right? It kind of sharpening up the brain. You know how if you ever uh, well, now I know most of the people don't even do that no more. I was going to say skin a deer, but no, yeah, most people don't do that no more. Uh, when you prep for a test, you practice, right? You take a practice test, so that way you kind of getting used to the muscle memory, getting things set up in your mind, getting primed up, getting prepared by doing like I'm doing right now, right? Got my little mental order right here, 379.90. Got my stop loss right here, around 398.10. My target is here, 397.20. Okay, this is called mental preparedness. I'm preparing myself mentally so when the market does open, right, I can visualize the trades because I'm doing it now. If you visualize it now, you can make it reality next. Okay? And that's exactly what I do. This makes it a little bit easier for me to make my trades a lot better. It helps me sharpen the mind so I can ensure that I keep seeing these plays and making sure they play out. And it also teaches you the behavior of the price. Just because she doesn't come all the way down doesn't mean she's not. It just means she's going to have a healthy retracement. And it also teaches you right here in pre-market, you see how whippy it is, right? You see all this is a 3-minute chart. You see how gappy this chart is, right? On a 3-minute chart in the SPY, right? So up here, you see how whippy it's being? All these gaps whipping around here, right here. It came down here, gapped up to here, back to the 200. Now she's back to fall. She's falling back down again. You guys see how whippy she's being, right? So this is nutty. So if you're not skilled, right, and in trading, like say you're within, let's say 2 years. If you're within 2 years of trading, do not be trading pre-market. Okay, don't, because you're not going to get out. You're not going to get in and out as fast as you would on actual market. One, and two, you're going to get burned quickly. because pre-market does a lot of wicked stuff. If you're not used to watching pre-market and post-market, then you're a little more likely to get burned than make money on it. Okay, so get your skill set, sharpened right here in the market. Get used to the price. Spend some time during pre-market watching how the prices are playing out during pre-market. Get familiar with it, right? And then that way, when you do decide to play pre-market, you're able to play it a lot more carefully and safely. And you want to do market orders and pre-market, not limit orders. Limit orders are less likely to get tagged. However, you can run the bid and ask right over here. If you see like in this area, right, you want to put your entries, in these groupings. If you want to do limit orders, don't put them up here because then you're not going to get tagged in until these groupings finally make their way up to you, and then they can pass you because, like I said, it's the gap. It can bypass your limit entry. So when you want to get in an entry, let it get to where your entry is, and then place your entry. When you're doing limit orders, put your entries in these little groupings, and you'll be fine. You'll be able to take your position. Now, my target is still at 397.20. You notice how she's still slowly but surely making her way down, right? So if I went ahead and bought this pre-market, right, I'd be already up like 500 bucks on my way to 700 because of this little move right here. The little thousand shares, right? And they go down. Now, a lot of you probably say, "Well, crap, I can buy 1,000 shares at $397." Yes, you can, just not during pre-market. What I do is I take options versus the SPY chart, right? In this case, is the SPY chart versus the equity, and I use it to gauge what I'm wanting to make. Okay, that's what I do. You can't do it in pre-market because it doesn't work. Options don't work in pre-market or post-market. All has to be done during market hours. But give you a synopsis on options. Once you understand how they play out, the more in the money you go, you don't have to go too far deep in the money. Usually, roughly about $2 within strike price within the money. Strike price being if it was to expire, strike price is this 397.20. Okay, so you'll buy an option that says 397.20, and then there's a price involved. That's usually around about a dollar, $2 per share versus 397. Okay, so for folks that has a small account and you want to learn options like we do here, there's a thing called an options chart. We play option charts. All right. And I'll tell you what, we're going to run these side by side real quick. Let's see. Let's see. Give me a second here. Let me, while we're watching it get to my target, I'm going to set up my options real quick on the SPY. I got to do that anyway for today. But this is how we do it, man. We make money by doing it this way. Still minimizes risk, very much so. When the guys play my targets that I call out and whatnot, they make money. Why? Because my targets are, well, let's face it, valid. They work. Okay. There's really no way to put it. They work. So let's see. What did the SPY do? 393. So we need to go to 393s so I can show you all this. So I can place these side by side together, and we can walk them together during pre-market. See that gap up like I was talking about? See how that she turned before she got to 397.20, and just that little bit of hammer, then she gapped straight back up to here. See me how whippy it is? This is why I say you kind of want to stay away from it until you're really used to it. You want to stay away from it. You don't want to get bit by this kind of stuff. It's just not something you want to get involved in, right? It's dangerous. It's absolutely dangerous. So just kind of keep that in mind. So that being said, let's move over to my multi-chart here. you'll see what I'm talking about. These two, right? This one right here is the 1 minute SPY chart. This one is the 1 minute options chart. Okay, so this little dip here, right, is this right here. All right. So if you've seen, like, so instead of paying, you see it dip down here. Instead of getting in, because I called it in around here, around 390. Was it 393.55 ish? Because I even took a position here when I called it out. I usually take the positions I call out because hey, I want to make money too, doggone. Um, we took we took a position here, and you notice that's about roughly around here, 250, around 253. So you're going to take position roughly around about 255, about 250, 265-ish, 270. You can put it right here, $3 if you wish, right? It doesn't matter where you put it at. Just make sure you get in because of the indicators were showing that I was yelling when I was yelling it out. She was right, or I was right. Everything was popping over here. Right here's the 5 minute chart to the right, top right. See how this is why I called it. This move up here, she did everything I was wanting her to do during the market. She did it during pre-market. So when she bounced right here, and I saw her turn in and got back around, got back over 393.43. That's this line down here, right? She jumped, right? Sorry about this. I was teaching yesterday, and I still had these up here. Basically teaching what I'm showing you guys now. I was teaching this during our lecture in our lecture hall yesterday, while on the holiday, while everybody was out grilling and playing and having fun. We were out here. We were here in our community training, working for today. So, so anyway, it gets into here, and like I said, I even have one here saying that if you got in at this point in here, you still made money, right? $200 on options, but we're talking about right here, right? So it gets in here, from here to here. See how at this point, see how this is the 200 SMA up here, this purple line, okay? This purple line is 200 SMA. That was target. See how up here, from here to here, this. See, let me match them together. Let me put my mouse right here. Let's check out the vertical lines. Check out the vertical lines. So left card, left card. Look at the left card. See if I'm trying to find it. Give me a second. They kind of this thing lags a little bit. So not helpful. This thing's not helpful. So you see how just this candle alone. Oh, I see why it's doing that. Shoot. Duh. Of course it's going to do that. 5 minute chart. It's going to show a little different. There you go. 1 minute chart. 1 minute chart. Bam. There we go. There you go. Make it a little bit easier. It's an aggravating thing, right? So that's the target up there. If you notice on the options, we have a target to go to. We were looking for it to get to the 200. It got to the 200, which is also above 396. Was that 396.23? 396.23. And then, of course, you kind of jumbled around at this level, right? Now, if you want to back in, this tap would have got you up to here. This right here is a $2,000 day easy. 253 all the way to 623, right? That's $4. All you need is the meat of the move. You hear me say that all the time. All you need is the meat of the move. So if you take the meat of the move, right? You got your 1,000 here, then you got your other 1,000 here, right? Playing safe, not trying to hold it. Don't try to hold it. There's no reason to try to hold this, okay? I see what she did here. She made a nice little pullback here. This is a decent fade. You can make some money on this fade, but why try to hold it here? Just take profits, watch for the bounce, buy it back here at the 200, and then let her ride, right? Of course, locking in profits along the way until she breaks down. All right, this is a $2,000 days minimum just because of how she moved, based on the thesis we laid out before ago. So, oh well. So yeah, let's see how SPY is doing. Let's go back to the SPY. See how she came back up, right? But she didn't get back to our target, not our target, our entry, right? Because our entry was up here. Stop loss is up here. Now, a lot of you, when you're in these trades, you'll find yourselves getting scared while in the trade. You don't get scared before you take the trade. You always get scared after you take the trade. It's kind of funny, huh? You're like, wow, why am I being scared all of a sudden? Well, we're going over this in our lecture hall yesterday. The reason why you're getting scared, and let me pause that for a second. And you ever notice how people will sit there that are teaching this kind of thing and they say, oh, it's all about psychology, it's about psychology. They try to tell you everything what to do about psychology. And some things are pretty good. Some others, they're like, you got to get over your psychology if you want to win. And that's pretty much the end of it. It's like, good luck. They don't really tell you how, right? It's only a handful of people tell you how. Well, I'm one of those handful of people. I'm going to tell you how to help you get over psychology. And I feel, right, it may not be that accurate, but I feel that the ones that have gotten a little far in their career, right, that are, they're millionaires and all, they kind of forget sometimes what it feels like to start from the beginning, right? When you've got a $10,000 account or a $2,000 account, they speak very confidently about, oh, you can build a $2,000 account. You just need to do this, this, and this, and this. Yes, absolutely true. However, there is a problem with this, and this, and this. You have to overcome this, that, and the other. So, how do we overcome this, that, and the other? Well, in order to overcome it, we have to understand it. So let's start understanding it real quick, and then we're going to end it here. Okay? When you're in a trade, and kind of start watching for this. When you're in the trade, well, let me back up. When you're out of the trade and you're about to take a trade, you're focused on the trade, right? If you notice, you're focused on the trade. Okay, I see it coming into my entry point. I see it getting closer to my stop loss. I'm gonna go ahead and get ready to take entry here, and then I'm gonna go for target here, and then I can make my money and get out, and be done. So once if it breaks here, I'll take profit, or excuse me, I'll take a stop loss, and I'll even jump back in if she jumps back down to tag me in after. Cool, I can do this. So you're focused on the trade before you get into it, right? Well, as soon as you take that position, okay, and you got your stop loss in, you're doing everything right, but this is where your confidence that is literally built on a stack of cards is going to falter. You're going to sit there and be like, yes, I'm confident. I see everything's at the top. I see wicks. I see this is good, good trade, good trade. So you get in. She goes down. All right, doing good, doing good. As soon as she starts turning, right, before she even get to here, I think even when it gets to 200 SMA, as soon as you start seeing profits in, okay, you're going to get scared. You're going to be sitting there going, okay, I need to get out. I need to get out. I don't want to lose money. If I lose money, all of a sudden you forget the stop loss even exists. You forget that you're only risking maybe what, 30, 40 bucks, maybe 100, right, depending on how big your account is, and you forget so quickly. And all of a sudden you're worried about blowing up your account, and your stop loss is here, right? Your stop loss is here. So if your stop loss is here, why are you worried about blowing up your account? You can't blow up your account if you have a solid set in stop loss, right? You can literally get up and walk away because you already said when you put the stop loss in, I'm only risking $100 or $80, whatever it is that what the risk is at that moment. Not how much you put in, right? How much you're risking. Risking means you have a stop loss. Sell order, if it drops to that level, I'm willing to lose this much, is what that stop loss says. So people tend to forget that their stop loss is even there. And if you're not putting in a stop loss, put one there. And that should help alleviate any pain or fear of blowing up your account because the stop loss is there. Now, it will not hit that stop loss exactly all the time, right? Because if the stock gets volatile and it skips over, depending on your broker, of course, once it tags back in, because it skips, it has to re-enter, okay? Your stop loss will say, "Oh crap, it's at or above." Yoink! It jerks you out, okay? So you're not going to blow up your account. The only way you would blow up your account is if you're oversized in a position and it drops the other way with your stop loss being too far out. Then you can blow up your account. Okay, options to definitely do it to you if you don't watch it. Okay. Because you can enter in a big trade, okay, which ain't much, nothing, right? If you find a trade like it looks like she's going to go all the way up, price is roughly around 30 cents. You drop in 30 contracts, your account is only 3,000, and then all of a sudden, actually, I have to go like it's down to 3 cents, and you can do 3,000 for 30 contracts, and all of a sudden, she just drops. You just blew that account, okay, because you held on to it. So, and this is like way extreme. I doubt anybody would even do that. For the love of God, I hope not. But the point is that if you only do 10 contracts at a time, or I tell anybody, if you're brand new to options, just do one contract. One contract is $100. Okay, and when you compare it to the actual equity, in this case the SPY, $100 means you're technically putting in like $3,980, okay, on a trade. But you're still only risking, even though you put in $3,980, you're only risking 10 cents, 15 cents, right? Maybe a dollar, maybe you're risking a whole dollar, which is 100, because you only have 100 shares. Right? See, now I got stopped out virtually, so no big deal. All right, so the trade didn't work out. I was going all or nothing. No big deal, right? This was, I see, again, 397, 397.90. See, 397. I'm sorry, 398.10. That's 20 cents. 20 cents. I risked $20 on this little trade, right? No big deal. So, just by pricing stuff like this, it helps seize. Now, just again, you're only seeing patterns. You're only watching patterns. Okay, that's all you're doing is you're watching patterns. One of the things that people seem to also forget when they're trading, especially new traders, is you think you can come in this market and win. Okay? Put a sticky note on your monitor mirror somewhere. All right? First thing it needs to say is the one thing guaranteed this market is you're going to lose. It's not a matter of if, it's a matter of when. That is the statement it needs to be on your monitor. At any given time, you will lose. It's not a matter of if, it's a matter of when. All right? Now, I know it sounds a little bleak, but stick with me here. The next statement right up under that is a question. Sorry, I said a statement just backwards. The next thing under that will be a question under that statement. And the question is, how much are you willing to lose? That is the question. The ultimate question that will help you not blow up your account. That will keep you on the straight and narrow and keep you on the right path to glory and riches, okay? To your financial freedom. So put that on there. Put that up there to say exactly that. Put a note on the top of your monitor saying, I will lose. I messed that up. Put a note on your monitor that says, I will lose. I am guaranteed to lose. It's not a matter of if, it's a matter of when. The question below that is, how much am I willing to lose? Okay? Make sure that question's in your mind all the time. Because when you go to take the trade, you're going to first thing to be thinking about before you take that trade, how much am I willing to lose on this? I don't care how much you put in on it, it's how much you're going to be risking, which is your stop loss. Okay? The next question under that one is going to be, how much am I wanting to make today? All right? Now, you're not going to hit your goal every time, every day. But the days you hit your goal, bravo. If you don't hit your goal, it's okay. Because if you hit your goal less times than you don't, you can still walk away profitable because your stop loss is short. Your target is not really long, but a little bit further out, I'm sure. So if you do the all or nothing trade, by having a stop loss, you're getting out because the trend is obviously not going your way if she's tagging you out, right? Now, here's what I already saying not necessarily. Well, yes, necessarily. If it comes back, it does the whole stumps you out and runs off. There's a rule called the 84% rule. Okay, the 84% rule is not mine. It's a rule that I've adopted by someone else that came up with it. Well, I believe he came up with it anyway. Um, yeah, I believe he came up with it anyway. But anyway, it states that you put your entry at the exact same spot that it was, stop loss at the exact same spot that it was, and let the price come back to you and run off. Now, if it runs off and gets to target, that's two trades, but a winning day, right? You have two winning trades. One, you've produced discipline and trade management, okay? Two, you also displayed money management, risk management, all in these two trades. And this is why you'll make more money than you'll lose because you have these stop losses. You're following these little set of rules that are not just mine, right? These are rules that are being produced and developed by people that's been doing this way longer and way more successful than I am. So I'm following these rules as well. So I guess what makes me different than these guys is that you always see these so-called gurus that either claim they have millions or they actually do have millions, right? I have two mentors. They're both in two separate niches of the market. One's a penny stock niche, one is a actual equity niche. So I have two different mentors, and both of them say the same thing, and both of them are I won't say rich, but they ain't broke. Okay, they're definitely millionaires, but they started off like us. Okay, that's why I chose these mentors. That they actually show you they started off. They talk about how they started off like us, right? And they can prove they started off like us, and they can prove they are where they want to be, which is where you want to be, right? Visualize your future. There's a book out there. I'm gonna go with Tony Robbins because Tony Robbins references this. There's a book out there that states that be around the people that you want to be. If you want to be rich, be around rich people. If you want to be intelligent, be around intelligent people. Well, I want a little bit of both. So I get around these very smart but rich individuals that made it before me, right? Because they started before me. So these are my mentors, and both mentors are transparent. That is key. Because of my mentors being transparent, I am inherently transparent on what I do and how I do things. Okay, they're just as transparent. I'm just as transparent as they are, and I find that to be a very important key. And there's a lot of gurus out there that are not transparent. They'll tell you, "Oh, I can make you 30,000 in 30 minutes," but yet they're not telling you how much you might be losing in that process to get to that 30,000. Okay, and the method that I have here is a very much of a no to low risk, high reward method. And all it is taking an options chart, matching it with a equities chart, and then riding the wave. Why am I doing that? It's because I do have a small account. I do not have or I'm trading on a small account. Let me rephrase that. Um, I like building small accounts to make sure this is clear because it keeps you humble, right? And when you're trading students, you know how hard it is. Uh, uh, well, of course you do, because you're the one you're dealing with it now. How hard it is for somebody's putting in like, oh, I made $2,300 off this trade that went up to $2. You're like, crap, I only made like 50. What am I doing wrong? You're not doing anything wrong. It's just that your size ain't the same, right? They have more equity to put it, or they have more capital to put into the equity to allow them to get to that profit range, whereas you don't have that much, right? If you only have enough money to buy 20 shares, of this equity, the SPY, then if it goes up $2, you only make 20 bucks. And you're like, crap, how's he making 2 grand? I'm only making 20 bucks. I'm doing something wrong. I need something better. And now you're finding these gurus, or excuse me, these furus, and you're like, cool, hell yeah, this is what I need. And they're doing the same thing, right? They have a bigger account than you, and now you're over leveraging where they're only using like maybe 10 or 2% of their account, okay? And that's where I find an issue. Small accounts are trying to keep up with big accounts, and they are blowing their stuff up. They're just blowing the portfolios. So I've found, and this is something I kind of conjured up my own, is I found if I started rebuilding small accounts, right, just like the students I have, then their profits are going to be the exact same as mine because we're taking the same size positions. They're taking the same positions. We're taking uh, the same entry points. Okay, and now our profits are not going to be exactly the same. We're going to come out with different results, of course, because some are going to sell quickly, some are going to hold longer, some are not going to have a stop loss, no matter how many times I tell them they should have one. The results are going to vary, but when they do follow, right, our profit range are roughly around the same. You know, if I make $100 or $1,500 on a dollar run, chances are they're making between $100 to $1,500 on that dollar run because we all have roughly around the same size. If I'm doing 1,000 shares, maybe they're doing just 100, right? Because their accounts they're not at that educational or experience level to get that far to be able to do that much, then I always recommend one contract, 100 shares, make $100. Because my motto is, right, even with PDT rule, pattern day trading rule, where you only get to trade three times out of 5 days, okay, 5 business days. So the trading pattern states, well, we already said that. So you can make, if you do $200, right? If you can roughly make around about $200 in 3 trades, that's $600. Okay, $600 a week. $600 a week is $2,400 a month. Okay, I know it's not life-changing money, but believe it or not, that's life-changing money for a lot of people because right now, even with a few states out there, a lot of people are not making 2,400 a month, 2,400 a week. Or I'm sorry, $24,000 a year. Okay. That's the thing. A lot of people ain't making $24,000 or $28,000 a year. I think it'd be $28,000 a year for 2,400 a month. So yeah. So there a lot of people ain't making that. All right. But that's the thing with a small account. If you become, or let me rephrase this, once you become consistently profitable because you have quick stop losses, you have targets, you ask the questions you're supposed to ask, right? The 3 questions I said to ask. Then you find yourself becoming financially free slower, or not slowly, but surely. And you don't have to be a rich person to do it. You don't have to have a $50,000 account to do it. All right? It's all about locking in the single wins to get to a bigger goal. And that's how we do it. And that's how I'm going to end it right there. We are 5 minutes left in the market. You see right here, we're still dancing around at right here near the pre-market high. If you notice real quick, let me jump out of the macro set and head to the thesis. Thesis states that we are still having a hard time getting over this line, staying over this line. So 5 minutes left in the market. If we can stay above this line, then I can see us getting to 403. But we got to stay over this line. So expect some whippiness, right? Maybe even expect it to come back to 397.55 at this point before she rips up to 403. Watch for an entry. Don't just jump in. Do not cause yourself to jump into a high risk trade when you can just wait patiently and get into a low risk trade for a higher reward. All right? And that's it for me. My name is Nick. This is the bullpen. I hope you enjoyed yourself. I hope you learned so much. And as always, I hope you had your bucket out because I had some golden nuggets that I threw in the buckets just for you to help you pro, push further into your career.